All right. Welcome back. Welcome back. More Than Money Trading family. We're dealing with some technical analysis. I know you guys are having a great day. If you're not, your great day starts right now with this great energy and great information. In this session, we will be dealing with breakouts, retests, and fake outs. These are very important when you're trying to understand technical analysis, when you're trying to understand market structure and price action. So what specifically is a breakout? We've talked about it in a couple of videos, but let's jump right on into it. What is a breakout? What does that exactly look like? Let me go to this image right here. Okay, so what exactly is a breakout? Okay, what do we have here? We have a level. This line right here represents a level of resistance that you've marked in the past because, hey, price kept stopping there. And we're seeing that that's a pretty strong or very strong level of resistance. But at some point in time, we had this bullish candle, or let's just say if it was a bearish candle, and it broke through. Okay, this is the next indication to let you know that it is a true breakout, that another candle opens above that candle, and ultimately this next candle stays above this level of resistance, or if this is vice versa, below that level of resistance. Even though, as we see, it broke through, the new candle opened right here, it started to push downward, and boom, it started to shoot up. It shot up to its highest point. It pushed down a little bit. It pushed down a little bit more, and it closed out right here. So this is indeed a true breakout right here. When one candle breaks through and the next candle stays above the level of resistance, or and vice versa, below the level of resistance. Let's take it to another example. Here we see another example of exactly what I'm talking about. It's simple, guys. Again, the breakthrough, but the confirmation in breakthrough. This candle, it opened up right here, it pushed down, it hit off of this level, and it's pushing up. So this is what I want you guys to understand. You know, the levels of resistance can be your friend or they can be your foe. It just depends on how you choose to view them and what's going on with price. In this instance, you know, this level of resistance was definitely your friend when we got the breakthrough. You know, let's say if we hopped in on this candle, my ideal area to hop in on this candle. Okay, so remember, price broke through right here, new candle opened up right here, it pushed down, it started back to push up. As soon as that thing pushes back up and it meets about right here at this angle right here, I'm jumping in on that thing. And this is why I say your level of resistance was your friend, because once it broke through, it just bounced off. It bounced off and it rejected off of that. And it's helping to push in the direction that you want price to push into. Now, are things always 100% going to go this way? No. This is why we always tell you guys, never, ever over leverage, because sometimes the market just has a mind of its own. So I also want you guys to, okay, now we have down the general principles of a breakout. Now let's deal with a fake out. So let's go back to the original picture. So this is that breakout. It's broke through that level of resistance. And the new candle, let's say, okay, so the new candle opens up right here. And what does this wick tell you? That it probably did push up this way. And you're like, oh, this is money because it broke through, a new candle opened up and it started to push up. This is money. That's a slight gamble that you're taking. I would tell you guys to be very careful of that. Generally speaking, you know, we like for price to bounce off and reject and then push up. But, you know, for my advanced traders out there, if at times you see that new candle open up and it starts to push up past this wick, for example, that's your choice if you choose to take that trade. You know, I wouldn't say that that's a bad trade to take. But let's say, for example, my 0.5% order size that I usually put up is $10. On a trade like this, you know, if I'm not going to wait for it to bounce off of this resistance level and push up for the complete breakout, I would possibly lower my risk, maybe like down to a $7 trade. You know, if my typical 0.5% is like $10, I would lower it down to maybe like $7 or something like that, because I know, you know, I'm dealing with not as high of a probability right there. And then again, like I said before, you know, just because it bounces off this level of resistance doesn't mean that it's going to continue to push back upwards. It could start pushing down and do just like this and hit us with a fake out. Because again, this is the person that may have taken that trade that I just mentioned, you know, that trade with not as high of a probability. And it started pushing up and it pushed past that point. He said, I'm jumping in, boom, and that thing fake you out, and it pushed back down through this resistance. So it came back under this resistance, it faked you out. And the problem with that is a lot of times when it pushes back under this level of resistance, it gets stuck under this level of resistance. It tries to fight back, and it's hard for it to fight back through this roof right here. So you have to be very careful of such. Let's go to another example. We see the same thing here. We see a couple of lightly bullish candles pushing up, and that looks like it could be something like this. But what are those wicks telling you? This is why I always tell you, be in flow with the market. Watch for all of the different clues that the market is giving you. Japanese candles are a beautiful thing because they're telling you about price action. They're telling you the story behind what's going on in the market. These are full candles. That's letting you know that it is strong momentum with these flat bottoms, flat tops. But look at this. These wicks are telling you to be careful. Even though it broke out, it's telling you be careful because something's pulling me down. Something's pulling me down. New candle open and it pulled you right down. And that indeed is a fake out right there. You thought you was going to get this, but those wicks told you to be careful, to be very careful, and that you may not want to jump into this trade at all. I wouldn't jump into this trade because those wicks are telling me something and I'm paying attention to those wicks. Here's another example of a fake out. We see the level of resistance. Boom, it hit his head. Boom, it's hit his head. Boom, it's hit his head. Uh-oh, it's pushing through. And you saying, okay, all right, now we got money. You saying we got money because that thing pushed through. But you forgot that I just told you to be careful of those wicks at the top. Be careful of those long wicks at the top. This wick right here just told you, be careful, man. Something's going on. Another small wick right here. And what do we see? A reversal pattern that pushed that was such a strong reversal pattern, because you see this engulfing candle and it pushed you right back through that level of resistance and back to a downtrend. So you really have to be careful and you really have to watch for the signs that it could be a fake out. Just because it breaks through doesn't mean that for certain it's going to continue to move up. Nothing is guaranteed, but that the market is going to do what it's going to do. It's for us to analyze, anticipate, you know, look at what are the probabilities and manage our risk. Manage your risk, manage your emotions in this market, guys. Don't let it take advantage of you, and don't be gamblers out here. Don't be gamblers. Let's find those great setups and let's find those great entry points, and let's manage our risk at all times. Another example of a fake breakouts. These wicks, it's price trying to break out of the zone, but then it closes back below. Many people would enter exactly as price is moving up and then have a losing trade once price closes back below. You need to wait for price to close above the zone to confirm the breakout. Exactly. This is the level of resistance right here. What are these wicks telling you? These wicks are telling you, I want to go up there, but I just can't go up there. And it's pulling down. And it's pulling down. That's why I say take your time and watch what price is doing. You get a little bit excited. It's pulling down. It's letting you know it did it here again. Then it finally started to push through, but I would still be careful with that because look at that wick right there. That's dangerous. That's dangerous. These are signs of those fake outs. And so I also, now we've dealt with breakouts. We've dealt with fake outs that can fake you out. But, you know, I'm also going to touch on pullbacks. So what does a pullback look like? This is the breakout. This is the breakout, or it's labeled breakdown right here, but breakout is just breaking downwards. So this is a breakout. This is a breakout. And what did price do? Boom, it came back, retested. We out of here. Boom, breakout. Price came back, retested. We out of here. Retest are a beautiful thing. We kind of talked about that earlier. When it comes back to that level of resistance, when it comes back to that level of resistance, so that level of resistance starts to work in your favor. And right here, it worked as a ceiling. Right here is it worked as a floor. So for me, idealistically on a trade as such, either I'm jumping in, to be honest with you, when it passes this mark right here at times, depending on the strength and the momentum of the candle. Sometimes I may jump in at the beginning of the open of the confirmation candle as well. So those are the points that I'm looking at. Like I say, like right here, once it starts to engulf, or at that confirmation candle. Some people will wait into that third candle, but for me, at times that's a little bit too late. I want to jump in at the earliest point possible, because for me, that gives me a higher probability for the clear. Because remember, we're based on timing. We're based on entry point, and we're based on distance away from the entry point. Because I want this trade to close out 2 candles in profit, a candle and a half in profit, a long candle in profit. I don't want the type of trade that's going to have me in and out of profit right at the end of the trade. Let me move this just in case if you guys need to see this area right here. And that pretty much wraps up this session, guys. So if you guys have any questions about such, make sure you ask your mentor. Bring your questions to the chat. This is what the community is for. This is what the ecosystem is for. Because you're not gonna get everything right away. You're not gonna always get it, but this is what we're here for, to support you through your journey. And that wraps up this session, guys, on breakouts, fake outs, and retests. Peace, guys.